Hi guys, my name is Sarvan Kumar, your economy faculty. Welcome to Rathod's IAS. Friends, this week many important economic current affairs have appeared in different newspapers. As I said in the previous class, we are going to look at the economic current affairs which are appeared in different sources such as Indian Express, Live Mint, the Hindu Business Line and even the PIB. So, let us continue our discussion of the Economic Weekly and let us see the first topic. Guys, see, the Maharashtra government has issued a government resolution which will allow the sugar mills to pay the basic fair and remunerative price FRP, right, in two tranches. See guys, now the fair and remunerative price is a part of agricultural price policy of the country. Now, as I promised in the previous session that not only the current affairs, but you are also going to have a conceptual knowledge, that is particularly the static with respect to the economy in our economic weekly classes. So, as a part of it, let us look at this agricultural price policy and we will come back to the current affairs. See guys, I would put it very simply for you, okay? Right. Now, as a part of agricultural price policy, we are going to get the four important prices. See, the first one is the MSP, minimum support price. The second one is the procurement price. The third one is the central issue price. And the fourth one is the fair and remunerative price. The last one was our context, right? Now, as I said, we are going to have the conceptual knowledge with respect to the topic as a whole. As a result of it, I have decided to teach you even the rest of the prices. Now, one thing is common in all these things, that is prices. So, majorly these four important prices were announced by the government of India on the recommendations of the CACP. There is an institution called CACP. CACP stands for Commission for Agricultural Cost and Prices. On the recommendations of the CACP, the government of India is going to announce these four important prices. To put it very technically for you from the perspective of the UPSC, as the UPSC is very particular about these topics. See, right, all these important four prices is a part of agriculture price policy, right? These prices are announced. You need to remember these words. Announced by Government of India, right? Next, they are approved by Cabinet Committee on Economic Affairs. Next, they are recommended by CACP. So, this MSP, procurement price, central issue price and fair and remunerative price are recommended at what level the MSP should be, at what level the procurement should be, at what price the CAP should be, at what price the FRP should be. All these are recommended by the CACP. Who will recommend this? CACP. To whom it will recommend? It will recommend it to the Cabinet Committee on Economic Affairs. And who will announce these prices? The Government of India. So, on the recommendations of the CACP, on the approval of the Cabinet Committee on Economic Affairs, the Government of India is going to announce these four important prices. CACP, the CACP will recommend it to the Cabinet Committee on Economic Affairs, and by the approval of the Cabinet Committee on Economic Affairs, the Government of India is going to announce it. I hope it is very clear. Now, let us try to understand these four important prices one by one, right? Now, you might have already come across this term MSP. MSP stands for minimum support price. Now, it's a part of agriculture price policy of the country. Now, what is this MSP? MSP is defined as a remunerative price. MSP is a remunerative price which is announced before the sowing season, for 23 major crops in the country. Right. Now, when I say it's a remunerative price, you know, right? Let us try to understand the remunerative price. What is a remunerative price? It simply means if a price is announced to any particular product over and above its cost of production, generally it would term as a remunerative price. Now, let us try to understand it. Now, in order to take up agriculture, a farmer needs a various inputs. We call them as agricultural inputs. Say for example, he needs high yielding variety seeds, he needs chemical pesticides, he needs chemical fertilizers, right? He needs to provide irrigation, right? He needs to have some kind of farm equipment such as tractors, harvesters. All these are various kinds of inputs which are mandated right after the green revolution in the country in order to increase the production of the food grains. Now, in order to have all these inputs, the farmer need to incur some amount. Farmer need to spend some amount. We call it as cost of production. If the remunerative price, if the price given to the particular product is over and above the cost of this production, then only it is considered as a remunerative price. Let us, for our understanding, imagine a farmer have incurred an amount of 1000 rupees in order to have all these agricultural inputs. Without agricultural inputs, the farmer can't take up the agricultural activity. As a result of it, so in order to purchase all these inputs, he spent an amount of 1000 rupees. Now, when I say remunerative price, definitely the amount should more than be 1000 rupees. Now, what's the formula? See. Now, MSP, as I said, it's a remunerative price. When I say remunerative price, it is over and above the cost of production. Next comes the question, how much percentage is over and above the cost of production is MSP? To put it simply, so as MSP is a remunerative price, in our example, the cost of production for the agriculture is 1000 rupees here. Now, MSP is declared currently in India as 150% of the cost of production. So, 150% of 1000 rupees is 1500. So, 1500. Now, MSP is nothing but MSP is 150% of the cost of production, right? 150% of the cost of production. MSP is a remunerative price announced by the Government of India with the approval of Cabinet Committee on Economic Affairs on the recommendations of the CACP before the sowing season, right? I hope it is very clear for you. Now, when I say it's a remunerative price, it should definitely be over and above the cost of production. Now, the cost of production in our example is 1000 rupees, and I said MSP is 150% of the cost of production. 1000 rupees into 150% is 1500. Simple. Now, here comes the main important question, how this cost of production is calculated. Now, there are three components of cost of production usually we consider. Not we, but actually the CACP. As I said, the CACP is going to recommend this MSP. How much should be the MSP for a quintal of paddy is recommended by the CACP. To whom it will get recommended to the Cabinet Committee on Economic Affairs. If the Cabinet Committee on Economic Affairs approves that price for the quintal of paddy, then the Government of India is going to announce it before the sowing season. Right? I hope it is very clear for you. Now, as I said, there are the three important components of the cost of production. Right? Now, we have the A2, A2 plus FL and C2. Now, understand, A2 simply means all those inputs, all those expenditure made by the farmer out of his pocket in order to purchase the agriculture inputs. Say for example, in order to purchase the high yielding variety seeds, right? In order to purchase the high yielding variety seeds, in order to purchase the chemical pesticides and chemical fertilizers, the farmers will incur some money. Now we call it as input cost, and that cost is nothing but A2 component. Say for example, if the farmer spends 600 rupees on all the inputs that he have required, it's an A2 component of cost of production. Now, next we have the second important component. This is the first one. The second important component is A2 plus FL. FL stands for family labor. FL stands for family labor. Now, for example, in our case, above case, A2 component is nothing but the amount the farmer made an expenditure on purchasing the inputs in order to take up the agricultural activities is called A2 component. Next we have the FL, right? FL stands for family labor. Now guys, you all know, you might have already seen in your rural areas that many a times the farmer's wife will come to the field and she will work, and the farmer's son also comes to the field and he will work. Usually the farmer won't pay a wage, a labor. The farmer won't pay a labor for his wife as well as to his son. So for example, he is a farmer, he is taking up this agricultural activities here, and many a times the wife and son will come to the field and work. Now, for the work provided by them to his farmer in his farmland, the farmer is not going to pay the work, not going to pay the labor for them, because she is her wife and they are the sons. They usually work there in the fields. So now, if the farmer calls two other persons from outside to do the work, he needs to pay them the labor. Often the farmers call the laborers in order to do various activities in their farmland. Now, here in the above case, in the normal case, now what is the normal situation? He needs to bring the labor to work in the farmland. Now, if he brings the labor to work in the farmland, he needs to pay a labor for them. Now, instead of bringing the workers and paying the labor, now the farmer, what he is doing is, he is taking the activity, he is taking the services of his wife and sons to work in the farm. Now, even if we consider that unpaid family labor, then we have this A2 plus FL component of cost of production. Say for example, we need to pay 400 rupees for them. If at all we bring the people from outside, imagine myself as a farmer. I made my wife and the son work in my farmland. Earlier I spent about 600 rupees on purchasing the inputs, and now I need to bring the laborer also, which I need to pay 400 rupees. Instead of bringing them, I just made my family, for example, wife and son, to work in the farm. If at all I bring the outside persons, I need to pay them. Now, even if it is considered, even if the unpaid family labor is also considered, we call it as A2 plus FL component. I hope it is very clear. Imagine each person needs to pay 200 rupees, cumulatively it is 1000 rupees. Next, we have the another important component called C2. Now, C2 is nothing but A2 plus FL plus revenue foregone on own capital. To put it very simply in a layman language, imagine if you are a farmer, you need to make this A2 component of cost of production. You need to purchase all the inputs. Now, sometimes you have the family labor or you will bring the labor. Now, you need to remember A2 component, purchasing all those inputs is a cost of production. We need to purchase all those. In case of family labor, if you need to bring the labor, it is also parts of cost of production. Now, imagine yourself as a farmer and you don't have a farmland for you. You don't have a tractor for you to work on the farmland. Imagine if you don't have it, you need to rent them. Right? Even renting the land, even renting the tractor will also becomes a cost of production, isn't it? Now, even if we add such kind of an amount, we will get the C2. Imagine the farmer needs to pay a rent and the rent amount to the land as well as cumulatively to the tractors and rest of the capital equipment as 1000 rupees. Many of the farmers might have their own land, but while deciding the cost of production, the rent amount on that particular land is also be calculated. Then only we will have the actual cost of production. Say for example, this farmer spent 600 rupees on purchasing it. He spends 400 rupees on bringing the labor. He needs to pay 1000 rupees for the rent of that particular land and for the tractors and rest of the harvesters used. This shows the clear pictures of cost of production. So in such a way, the cost of production have three components: A2, A2 plus FL and C2. Right? I hope it is very clear. Now you need to remember here one important point. Now, actually, MS Swaminathan recommended that MSP should be 150% of the C2 component. Now, what is the C2 component? What do we have the A2 plus FL? A2 plus FL is 1000 rupees and this amount is 1000. So, cumulatively we have 2000 rupees. So, here we can say simply A2 is equal to 600, A2 plus FL. If we add the cost of production for the family labor also, then we will have the 1000. Next, we have the C2. C2 is nothing but A2 plus FL plus the revenue foregone on the own assets. Imagine you are a farmer. Now, the cost of, if you have your own land and own tractor, the cost of production of producing the rice would be low because it's your own land. You need not to pay rent for anybody. Imagine a same farmer who takes the land on rent. He needs to pay that rent to the owner. So, even the rent payment will also be a cost of production. So, it also need to be considered. Right? This is the C2 component. Now, imagine we have this 2000 rupees because C2 is A2 plus FL plus these revenue foregone on those owned assets. So, we have these three important components of cost of production. Now, tell me, as in the beginning of the class, I said you that this MSP is nothing but a remunerative price which is announced 150% of the cost of production. Now when it comes to the case of cost of production, we have three important components. And what component currently the government of India is giving that 150% as MSP? Is it on A2, is it on A2 plus FL, or it is on C2? Now, the government of India currently announcing the MSP on A2 plus FL component, that is 150% of 1000, that is 1500. 150,000 now, 150% of 1000, right? I hope it is very clear. Now currently you need to remember both the MS Swaminathan Commission as well as the current farmers who are doing the protests are demanding that MSP should be announced 150% on the C2 component. If it is announced on the C2 component, MSP would be 3000 rupees, isn't it? 150% of the 2000 rupees would be 3000, but it is not currently happening. You need to remember that on the A2 plus FL component of cost of production only 150% is announced as MSP by the government. Right? You need to also remember that MSP is announced for quintal, not bought for the tons. So in such a way, MSP is a minimum support price, is a remunerative price which is announced for 23 major crops before the harvest season, right, in the country. You know that we do have two important seasons, Kharif season and Rabi season, rainy season and winter season, paddy crop and the wheat crop respectively. So you need to remember that MSP is not announced once in the country, as we have two important seasons and MSP is announced before the sowing season. So both for the Kharif crops and as for the Rabi crops, we have the MSP being announced at least twice in a year, right? You need to remember it. There might be options in the UPSC that MSP is only announced once a year. So you should be very careful with respect to those terms, right? I hope you very clearly understood what is the meaning of MSP. Now, with the basic PDS system, with the working of the PDS system, you know the meaning of PDS, public distribution system. We can clearly understand what is this. Next important prices: procurement price, central issue price, and fair and remunerative price. Remember guys, the price at which the procurement agencies will procure the food grains from the farmers is called procurement price, right? Try to understand. Now imagine he is a farmer. Now here we have the Food Corporation of India. Now with this PDS system only we can understand this procurement price and central issue price. Now as I said, by definition procurement price is nothing but the price at which the procurement agencies like FCI is going to procure that food grains from the farmers. Now for our understanding, the FCI is going to procure 1 kg of rice. For our understanding, let us try to understand. Currently, the FCI is procuring 1 kg of rice from the farmers through the APMC markets, right? Next, now the price, so the FCI is going to pay that procurement price for the farmers. Now, procurement price is the price at which the Food Corporation of India or procurement agencies will procure the food grains from the farmers. It is announced before the harvest season, before harvest. While MSP is announced before the sowing season, that these procurement price is announced before the harvest season. I hope it is very clear for you. Now, you need to remember only once in the country, that is during 1966 and 67 Kharif season, that procurement price is announced. Procurement price is usually higher than the MSP. The procurement price is usually higher than MSP, but unfortunately it is only announced once in the country, that is during the year of 1967 and 66 and 67, that too for the wheat crop. Now you may have a doubt, right? What is the current procurement price then? The current effective procurement price is nothing but MSP. Say for example, if the government announced, for our understanding, if government announced MSP as 100 rupees per kg, if government of India announces that MSP for a kg of rice is 100 rupees, then procurement price is also would be 100 rupees. But you need to be very cautious here. This is the meaning of effective procurement price is nothing but MSP. But you need to be very careful here. The price at which the food grain, the procurement agencies procures the food grains from the farmers is nothing but procurement price, but not MSP. By definition, both are different. At a monetary level, both are same. By definition, both are different. At monetary level, both are same. Say for example, if, see, in case of MSP, for the 1 kg of rice, if the government announces MSP as 100 rupees, now if somebody asks a question, what would be the procurement price? Then the procurement price is also 100 rupees. Now if somebody asks a question, at what price the procurement agencies is going to procure the food grains from the farmers? It is nothing but procurement price. You should not say MSP. You should not say MSP. It is the procurement price. By definition, both are different. Having a differences between, having good knowledge with respect to the differences between both these prices are very much important. But at monetary levels, both are different. Both are the same. Both are the 100. At definition level, both are different. I hope it is very clear for you. Now, here the farmers is paid with 100 rupees. The farmers is given with 100 rupees. As you know that Government of India announced 100 rupees per kg for the rice, and then automatically the procurement price is also would be 100 rupees, because monetary level, at monetary level, both are same. It is very clear for you. Now next, what happens is, imagine the FCA have paid 100 rupees to the farmers and it have taken the food grains. Now he paid 100 rupees for the farmers, and imagine from the farmer, the FCA needs to transport it to the FCA depots. You know that there will be a lot of number of depots all over located in the country. Imagine for the distribution of these food grains from the farmers to the FCA depots, the FCA incurred an amount of 25 rupees. Now next, the FCA is going to distribute all these food grains to the state government depots. Depot means godowns. So the state depots, to the state depots, right? From the state, so for the FCA is going to provide these food grains to every state government depots. From the state government depots, the food grains will be given to the fair price shops, where you can see the ultimate beneficiaries under the PDS system is standing and taking the food grains. Now for our understanding, now here we would say, see, the FCA paid 100 rupees to the farmer and procured the food grains. Now it incurred an amount of 25 rupees to transport these food grains from the farmers to the FCA godowns. From the FCA godowns, in order to distribute it to all the state government godowns, the FCA need to incur some money, right? Imagine it also as 25 rupees. Totally, the FCA spent an amount of 150 rupees in procuring the food grains from the farmers, transporting it to the FCA godowns, and from FCA godowns to the state government depots. Now you tell me, so the FCA should sell, say for example, it paid 100 rupees to the farmers, it incurred 25 rupees to it, and it also transported all these food grains to the state government depots, which incurred 25 rupees. So technically, the FCA should sell that food grains to the state government depots at 150 rupees, right? Because it is the cost incurred by the FCA. But instead of it, if the FCA sells these food grains to the state department at 50 rupees only, we call it as central issue price. To put it very simply for you, the price at which the Food Corporation of India selling the food grains to the state government depots or food grains depots or the godowns is called central issue price. The price at which the Food Corporation of India is selling the food grains to the state depots, the Food Corporation of India, or otherwise it is also called as the Government of India. The price at which the Government of India or Food Corporation of India is selling the food grains to the state government depots is called central issue price, or otherwise it is also sometimes called as issue price. Right? I hope it is very clear. Next, if it is sold at 50 rupees, here the FCA is lost 100 rupees, isn't it? It totally incurred a cost of 150 rupees, but it just sold at 50 rupees to the state depots. So here we have the 100 rupees. Next, we call this 100 rupees, the central government will bear this 100 rupees, right? We call it as central government food subsidy. We call it as central government food subsidy. Next, again the state depots got that amount, got that food grains at 50 rupees, just 50 rupees. Now it was given to the ultimate beneficiaries at 3 rupees. Remember, here we are talking about 1 kg of rice. Now here ultimate beneficiary is getting that 1 kg of rice at 3 rupees per kg. Now we call it as fair price. You know that these shops are called fair price shops, and the price at which these food grains are sold is called fair price. Now the state government got it at 50 rupees. The state government got it at 50 rupees, but it ultimately sold to the ultimate beneficiaries at 3 rupees. What is the gap in between? 47. Because the state got it at 50 rupees and ultimately it is given to the beneficiaries at 3 rupees. The balance is 47. This balance 47 rupees is nothing but, state government food subsidy. I hope it is very clear. So this 47 rupees is paid by the state government as state government food subsidy, and this 100 rupees is paid by the central government as central government food subsidy. Now we express them technically. Now central government food subsidy. How do we express them technically? See, here the central government food subsidy is technically expressed as the economic cost of food grains for the FCI. We call this 150 rupees as economic cost of food grains for the FCI. Remember, economic cost of food grains for FCI. So the three important components of economic cost of food grains for the FCI is that procurement price, nothing but MSP, the transportation cost as well as distribution cost. MSP, distribution cost and procurement costs are the three important components of economic cost of food grains for FCI. So central government food subsidy is nothing but economic cost of food grains of the FCI minus see the central issue price, the price at which the food grains are sold to the state government depots. So the economic cost of food grains is 150 rupees. What is the central issue price? The central issue price is 50, the remaining is 100. This 100 rupees is nothing but central government food subsidy. Similarly, the state government food subsidy is, see, the central issue price minus fair price. The central issue price is 50 rupees minus fair price is 3 rupees. The fair price is 3 rupees. So 47 rupees is called state government food subsidy. This is how you express technically the central government food subsidy and state government food subsidy. So this is about the MSP, the central issue price and procurement price. Finally, we have the fair and remunerative price. The fair and remunerative price is also similar to the MSP. But this fair and remunerative price is exclusively given to the crop sugarcane. The fair and remunerative price is a price exclusively given for the crop of sugarcane. Right? Now, this fair and remunerative price is provided by the sugar mill owners. You need to remember, sugar mill owners. Say for example, if 290 per quintal is announced as fair and remunerative price by the government of India on the recommendations of CACP, the sugar mill owners is going to provide the 290 rupees per quintal, 290 rupees per quintal for the sugarcane growing farmers. Simple. I hope it is very clear. Now, these are the four important different kinds of prices: MSP, fair and remunerative price, right? Central issue price and procurement price. And so these are the many important prices that we usually found in your agriculture price policy. Remember, the nodal agency for agriculture price policy is nothing but the CACP. Next, when we look at this background of this, I hope it is very clear. You can just go through the background. So MSP is recommended on the recommendations of the Ford Foundation Committee, and L.K. Jha recommended to set up the Agriculture Price Commission in 1985. Next, right? Y.K. Alag Committee recommended a statutory status for the CACP, but which currently is not given to it. Now, as I said, it is the nodal agency which determines the agriculture price policy of the country, and it submits the price policy report to the union government. Next, it is going to announce these four important prices, right? So in such a way, the Commission for Agriculture Cost and Prices is going to, all these four kinds of prices are recommended by the CACP and is non-binding on the Cabinet Committee on Economic Affairs. This is very important, you need to remember. It will recommend it to the Cabinet Committee on Economic Affairs. If it approves it, the Government of India will announce it. But these recommendations are not binding. You need to remember it, right? So these are about the MSP that we have discussed very well. So A2 plus and FL components. So the A2 plus FL and C2 is equal to interest on the value of owned fixed capital assets and rental value of the owned land, right? I hope it is very clear, right? This is about the different kinds of props given for the MSP and advantages of the MSP, and we also have the disadvantages of MSP. Just go through these things. Next, we have the procurement price, the four different kinds of prices that we have discussed. The central issue price. Next, the fair and remunerative price. Right. In 2009, MSP for sugarcane is replaced by the fair and remunerative price. You need to remember, we have another price called state advised price. State advised price is nothing but a price announced also for the sugarcane, but it is over and above the fair and remunerative price announced by the government of India. While state advisory price is announced by the state, which is above the FRP for the sugarcane. Simple. Now, this FRP is based on the Rangarajan Committee report on recognizing the sugar industry. You need to remember these important facts. The payment for FRP across the country is governed by the Sugarcane Control Order of 1966, and the payment need to be done within 14 days. Now, FRP is based on the recovery of sugar from the cane, right? Recovery from the sugar cane. What is the meaning of recovery? Sugar recovery is the ratio between the sugar produced versus the cane crust. It is very simple to understand. So the higher the recovery, definitely automatically the FRB is also going to be higher. Next. So this is about the agriculture price policy. I hope it is understood. Next, we have the Pradhan Mantri Fasal Bima Yojana. Guys, when we talk about the agriculture sector in the country, first we talk about the land reforms. Next, as a part of land reforms, we have given the land to the farmers. Next, we have implemented the green revolution in order to increase the production and productivity. As everybody increases, every farmers after adopting the green revolution increases their production and productivity, we also need to ensure some minimum price for their produce, which is provided as MSP. Now, as the inputs of the green revolution is very costly in nature, we are providing them the agriculture finance through the commercial banks, regional rural banks and cooperative banks. Next, after providing, in order to market them, we have the agriculture marketing. In order to market the agriculture produce the farmers produced, we have enacted the Agriculture Produce Marketing Committees Acts. Next, finally, after providing all these things without any insurance for it, insurance for the crops, it is of no use. So as a result of it, the Pradhan Mantri Fasal Bima Yojana is one important scheme which is implemented in the country for agriculture insurance. So comes under the theme One Nation and One Scheme for all the agriculture insurance. You need to remember this point, very important. This scheme will replace two existing insurance schemes, NAIS and Modified NAIS, and wheat and weather-based crop insurance scheme. Right? It covers all the food crops, oil seeds, horticulture and commercial crops. And here we have the prescribed premium amount, 2% for the Kharif crops, try to remember them, and 1.5% for the all Rabi crops and 5% for the horticulture and commercial crops. There might be a question that it does not, the Pradhan Mantri Fasal Bima Yojana does not insure the commercial crops. In such a way, they are going to ask you the question, so be aware of it. Next, now, earlier the scheme was compulsory for all the loanee farmers. Say for example, on the basis of the source of the credit, right, we have the credit divided into institutional credit and non-institutional credit. Now in the non-institutional credit, we have the players such as money lenders, landlords, right, money lenders, landlords, commission agents, friends, in such a way. And on the institutional credit, we have the commercial banks, regional rural banks. Next, we have the cooperative banks, right? In order to define the technicality in how or which institution is providing more and more credit, first we have the commercial banks, next we have the cooperative banks, next we have RRBs. To put it very simply, what does it mean? The highest agricultural credit currently being disbursed in the country is by the commercial banks, next by the cooperative banks, next by regional rural banks. So earlier, for all those farmers who took the loans from this institutional credit, the Pradhan Mantri Fasal Bima Yojana insurance is compulsory. But later, after the amendments in 2021 to the Act, it is made 100% voluntary. Now, if the farmer wants, they can take it. If the farmer is a loanee farmer who took the loan from the institutional credit, they can opt it or they don't want to opt it. It's completely voluntary now. Right? This is about the Pradhan Mantri Fasal Bima Yojana. Next, when we look at the performance of the scheme, till date, the scheme has insured 30 crore farmers applications, 5.4 crore farmer applications on year-on-year basis. Over a period of 5 years, more than 8.3 crore families applications have benefited in the scheme. Just now in 2019 and 20, locust attack, the farmers in the Rajasthan alone have claimed about 35 crores from the Pradhan Mantri Fasal Bima Yojana. So with this data, you can simply understand this Pradhan Mantri Fasal Bima Yojana, which is one insurance scheme in the country, is doing very good. Right? Now let us try to look at the previous question now. See, the Pradhan Mantri Fasal Bima Yojana replaced the National Agriculture Insurance Scheme, Modified NAS and Weather-Based Insurance Scheme. Right? Is the first statement. So you can clearly see here that the scheme replaced the two existing insurance schemes and weather-based crop insurance. So far, the first statement is correct. And as I said, after 2020 amendment, the enrollment in this scheme is not compulsory for all. So option A is correct. Next, we have next important article, UPA and Nepal. Guys, recently the Nepal, our neighboring country, is the first country to adopt our unified payments interface system. Right? You all know that UPI is used by different kinds of customers to instantly, on a real-time basis, they can transfer the money, right, from one account to other account without any knowing about that bank account of the other parties. right? The UPA is currently the biggest. It is being implemented by this NPCA, operationalized by the NPCA, and UPA is not only the one which is operational by NPCA, but we have the NACH, the immediate payment service systems, other enabled payment systems. Apart from all these things which are operational by the NPCA, UPA is the biggest one. And you might have habituated to using all these UPI apps such as the Phone Pay, Paytm, Google Pay you might be using in your day-to-day lives, right? Next we have the NPCA, National Payments Corporation of India, as it is operationalizing agency, an umbrella organization. Remember, retail, it is for operating the retail payments and settlement systems in the country. In an initiative of the RBI as well as India's Banks Association IBA under the provisions of Payments and Settlements Act. You need to remember these provisions. And you know, BEAM is nothing but an UPI app which is being designed by the government, right, for the purpose of government, and it is developed by NPCA, as I said, and it allows the real-time fund transfer and launched in the December 2016. But here the BEAM has 3 levels of authentication. You know that every app will have their own levels of authentication. For one, app binds with the device ID and mobile number. You need to set up a PIN, and you, after scanning a QR code, you will type your PIN and you will going to transfer the money. You have a good idea with respect to all these different kinds of authentication which might be you using in your day-to-day lives, right? UPSC even have the chances to ask it. Once you have asked the question on this authentication also. Next, we have the Securities Printing and Minting Corporation of India. Right? Next, this is the important current affair. Recently, the Delhi headquarters of the Security Printing and Minting Corporation of India Limited has been declared as a prohibited place under Section 2 of Official Securities Act of 1923. Simple, guys. You know that everybody except 1 rupee note, every note is printed by RBI through its various institutions like this, and all the coins are minted by the government of India. Now, you also know that on the 1 rupee note we have the finance secretary's signature, and on the rest of the notes we have the RBI's governor signature. You might also know that the liability is with the RBI and guarantee is given by the central government to the bearer of the note. Right? These are the very important things you need to remember. Right? So, as far as this topic is concerned, it is under the jurisdiction of Ministry of Finance, and they have the 9 production units. This is a simple topic, just go through it. You can, right? Next we have Angadiyas. Guys, these Angadiyas are nothing but a people who use it to carry the cash which travels from one place to other place in order to complete the transactions. Particularly, these people are usually seen in jewelry business of Mumbai. Now, recently Mumbai police booked a case against the 3 Angadiyas, so as a result of it, it came into the news. So, the cash involved is huge, and it is responsibility of the Angadiyas to transfer the cash from one state to another, for which they charge a nominal fee. This is how they work. As far as this legality of the system is concerned, Angadiya system is legal. There is a lot of clouds or transparency. There is no clarity over the activities, and it is suspected that a lot of times it is used to transfer the unaccounted money of these people who participate in the jewelry trade. There have been suspicions that it is also used for the transfer of black money, right, like hawala transactions, which generally used across the countries. There are allegations, there are suspicions, but there is no, as of now, there is no proof. But recently a case being booked on them, so it's in news. So just need to remember what is this system is all about. UPSC, if at all, asks a question on it. Recently there is a word called Angadiyas which is related to. In such a way they will ask you the questions. They don't dwell into these kind of topics. So this is all about the Angadiyas. Next we have the money laundering. To put it simply, what is the meaning of money laundering? If you try to imagine itself. See, if you give your dirty white clothes to the laundry, what they are going to do? They are going to wash it and they are going to make it to white. Similarly, money laundering works in the same way in case of money. If you take the black money, it will get converted into the white and give it to back. So the money laundering is simply means converting the black money to the white money. You might have, see, there are various tools through which this black money is converted to the white money. Say for example, hawala. How the hawala work, you might have already seen this kind of things in your movies also. Say for example, imagine this is a guy, this is a guy in another country, and this is a guy in the domestic market. He might be submitting a lot of money through the hawala transaction guy, and he will give a confirmation message to his agent in the other country. Now many a times you might, in the movies you have observed that there might be a banknote. Some part of it might be with him and the other part might be with him. So in such a way, after the confirmation, the equivalent amount which he received in the domestic market will be given in foreign currency. And then he is going to distribute this amount to the various parts of the world, and then again it enters to the economic system. Again it enters to the economic system through the layering. So this is how the money laundering works. So in order to prevent these kind of transactions, the government came up with enacting Prevention of Money Laundering Act in 2002, right? And it came into the force in 2005. So to curb the money laundering, we have such kind of an acts. So when we look at the three main objectives of PLMA, to prevent the control of money laundering, to confiscate and seize the property, and to deal with any issues connected with the money laundering in India. Apart from beyond these objectives, what important for your UPSC is these kind of points: dispute redressal, right? Adjudicating authority is appointed by the central government. It decides whether the property attached or seized involved the money laundering or not. Next, we have the appellate tribunal, constitution of appellate tribunal, and we have also the constitution of the special court. Provision for establishing a special court by the union government under the Prevention of Money Laundering Act. So whether they are provided in the act or not is very much important for your UPSC. Next, when we look at the PML Amendment Act 2002, Prevention of Money Laundering Act, it adds a concept of reporting entity, which includes the banking company, financial institutions and intermediaries also, which simply means if at all the transactions involve any kind of fraudulent activities, they need to be informed for the concerned authorities. Next, 2002, so the PLMA 2002 has levied a fine up to 5 lakh, but the amendment has removed the upper limit. Now can impose any much amount. It has provided for the provisional attachment and confiscation of property of any person involved in such activities. Provisionally, the amount of the property will be confiscated, right? In such a way, these are the amendments. So which of the following is not a provision of the Prevention of Money Laundering Act of 2002? This might be the questions which might the UPSC prelims they might ask you. So be aware with these provisions. So these are the important topics that are appeared in this week's economy, and in the next week also we are going to have the discussion of the important current affairs which upon the perspective of the economy, right? Also, as I said, as I promised in the previous class, that we are going to cover both the current affairs as well as static topics in our classes. So I hope I have given the agriculture price policy and also a basic statics with respect to rest of the topics. So in such a way, you should cover your entire economic syllabus. So both the understanding of current affairs as well as amalgamating with the static is the best approach to cover your syllabus. So be aware with your statics as well as the current affairs, as these days the UPSC's trends is following in such a way. So I hope you enjoyed this class. Thank you and stay tuned to Rathod's IAS.